Well, when prices come down, you would expect import bills to come down. If you're an exporting country, perhaps you're not going to be very happy about this because export earnings will be affected. But if you're an importing country, especially a food deficit importing country that is very vulnerable, then it can be a very positive thing. So some countries look at this as favorable. When you have lots of supplies and demand is not very strong, as it seems to be the case in many food products, including cereals, you're going to see more competition among the main players. Definitely for certain cereals, especially wheat this year, we're going to see more of this than in the last few years. US dollar affects basically across the board all commodities, agriculture or non-agriculture, because basically all commodities are US dominated. So when US dollar gets strong, this means that for many countries where the currency have actually depreciated, import cost more in their own currency than otherwise. This could affect demand, this could curtail demand and therefore result in a contraction in world trade in some cases. So it really has a fundamental influence across the board. China, in almost every aspect in the report, the biennial report Food Outlook we published today, you will see that has implications, its policies and how things are changing there. In this particular case, China has massive maize inventories, and a decline in these inventories would mean that domestic consumption of maize will probably pick up, as a result of which demand for maize substitutes like barley, sorghum, the distilled grains, the DDGs, will shrink. So all of that will obviously have international or let's say global implications. Farmers really respond a lot to prices in many countries, and more so in the last few years than perhaps in the distant past. So they will see where the profitability lies. Right now, for example, there has been a huge increase of late in the soybean market. This is obviously going to make farmers think twice whether they should be planting more maize or more soybeans. And it could be said for many other commodities as well. So price differentials and what's happening, what farmers expect from the market in the short term is going to affect their intentions.